Basically, everything that you do is going to be tied to having a good credit score in Canada. And now, to be able to boost your credit score in Canada, you need to keep collecting credits. As a matter of fact, I don't think I enjoy finance. In school, finance was my least favorite subject. Hey guys, welcome to my channel. It's Kosi here again. How are you? Thank you for stopping by to hear what I have to say in today's video. If you are a new subscriber, hey, welcome to the community. Thank you for deciding to join us here. I hope you enjoy it. On this channel, I do my best to talk to you guys about my experiences as a newcomer in Canada, just because I feel like some of you might find some of the lessons that I've learned also beneficial. So please make sure you stick around and tell someone else to tell someone else to tell someone else to come join this lovely community. And if you're an OG, a returning subscriber, hey, what's up? What do you do? I hope you've been keeping safe since my last upload, or since the last video that you watched. Today's video, I'm talking about something very, very important because it relates to money. Anything that has to do with personal finance, financial planning, and how you spend your money as a newcomer in Canada, trust me, is totally important because it can either make or break your experience here. And today's topic, I'm going to be talking to you guys about how to fix your credit score. And the reason I'm talking about this is because many of us do not really understand how the credit system actually works. So your first car, your first house, even your phone, many of us are used to saving up for it and then going to buy it. But the reverse is the case here in Canada. So the system is actually structured in a way that encourages you to actually take credit, so that you can build your credit history. So are you excited? You want to know what you should be doing from the very first day you get into Canada to help improve your credit score and to give you a good credit record? Then don't go anywhere and we'll get into the gist of the story in a bit. So disclaimer, I'm not a financial advisor. I'll be using layman terms to explain most of these things to you. Pardon me if you're expecting something more professional. As a matter of fact, I don't think I enjoy finance. In school, finance was my least favorite subject. Now I've broken down this video into 3 categories. Number 1, what you need a good credit score for. Number 2, the things you need to be doing to be able to fix your credit score and make sure you have a good credit score. And number 3, if for any reason you did not know all of this in the beginning and you've had a very bad record for your credit, what can you do to fix it? So the very first week after we arrived, after we opened our first bank account, we had a credit advance of 1,500 Canadian dollars on a credit card, even without us asking. So we didn't even need to check our credit history or credit score for them to trust us enough to give us a credit of 1,500. So that $1,500 was what we actually started using to start building our credit here in Canada. So automatically, when you collect credit, even on a credit card, you have a credit account, which is linked to Equifax, which is the credit reporting agency here in Canada. So what happens is that your credit report is contained in your credit account. So any credit you collect apart from the credit card or anything else would actually be recorded in your credit account, and your credit report at the end of the day gives you something we call a credit score. Credit account has a credit report. Your credit report gives you your credit score. And now, to be able to boost your credit score in Canada, you need to keep collecting credits. That's crazy. So the moment you take your first credit, you're already roped in. You need to keep collecting more credit in order to be able to prove that you're trustworthy and they can keep giving you more credits. Crazy cycle, I know. The higher your credit score, the less risk you are to a lender. So if you have a very high credit score, meaning that you've been collecting credit in the past before and you've been able to repay your credit, if you need to approach a lender in the future, the lender is able to look through your record and see that, okay, you've been collecting credit and you've been paying back your credit. That means if they give you credit again in the future, there are higher chances that you would pay. Now the trick is that if you've not been collecting credit, the lender would not trust you enough to be able to give you credit if you request credit in the future. I know it's crazy. And the importance of having a credit account in Canada is, number 1, you can access loan if you want to in the future. For instance, if you want to buy a house, you're ready to get a mortgage, your credit, having a good credit score would increase your chances of getting mortgage. Instead of paying 100% cash for your phone, you can actually finance your phone through one of the phone providers. They will need to see your credit score. Sometimes some landlords also need to check your credit score to decide if they will take you as a tenant or not. Basically, everything that you do is going to be tied to having a good credit score in Canada. A good credit score would also determine how much the interest rate would be if the lender decides to approve your application for credit. The higher your credit score, the higher the chances of you getting a very low interest rate. So if you have very low credit score, the lender automatically sees that as a red flag, meaning that you've not been doing so well with your credit in the past, either because you've not been paying back or you've not been taking credit at all, so you don't have any record for them to make reference to. So in order to safeguard their own interest, the higher chances that your interest rate will be very high, and that would also determine how much they'll give to you. So yeah, if you're still watching up to this point, it means that this video is making sense. Have you subscribed? Please subscribe so you can join the community and you know when I have content like this again in the future. So like I mentioned, there are different ways for you to be able to access credit. We have the credit card, which is probably the easiest way to get credit. Like I said, during our first week of arrival, we got 1,500 credit on our credit card already, even without having any credit record in Canada. Then you also have line of credit. For credit card, you actually pay very high interest rates compared to a line of credit, and then you don't have access to a lot of money. But with a line of credit, you're able to get as much as 10,000, 15,000, 20,000 Canadian dollars in your line of credit. Another thing you can do is a car loan. Even if you have cash to pay for your car 100%, it's always advisable to take a loan so that you can also use that to begin to build your credit records in Canada. Another thing that people usually take credit for is for their phones. You can actually finance your phone instead of paying 100%, when you're buying a phone. There are usually several plans that allows you to, pay little bits every month until you finally pay up for the phone after a few months. So if you have that opportunity, that's also a good avenue for you to be able to build your credit here in Canada. Now, if for some reason you do have bad credit score, what can you do to fix it? What are the best practices that you should have in mind when taking credit here in Canada as a newcomer? So the first thing that you can do to fix your credit score is actually make sure that you pay off all your balances on time. If for instance you have a credit card and you'll be using your credit card, in your account you would always see what your due date for repayment is. Make sure you pay up your balance before the end of your due date, because if you do not, it's going to count against you in your credit record. The other thing is make sure you pay your monthly bills on time. Your insurance, your rent, your phone bills. Do not skip payments, because if you do skip payments, it's going to affect your credit score negatively. So what we do is that we set up pre-authorized deposits as often as we can for our phone bills, for our rent, and all other recurring payments that have to be done monthly. We also learned that it's important to keep your credit balance as low as possible. When we got the credit card of 1,500, what we were doing is that for every time we take out of the 1,500, we always made sure that we repaid it as often and as quickly as possible, so we're not using up our credit limits at all times. And the thing about applying for credit frequently is that for every time you apply for credit, there's something called a hard check. So the lender is going to actually do a credit check to see what your credit score is. For every time a lender does a check, it actually reduces your credit score. The thing that we learned is that we oftentimes try to check our own credit score by ourselves, so that's usually a soft check. A soft check doesn't reduce your credit score, so we use an app called Borrowwell app, and whenever you put in all your details on the app, you're able to tell what your credit score is as of the last report. I bank with CIBC, and my CIBC app also tells me what my credit score as of the last report was as well. So that gives us a fair understanding of where we stand and what we should be doing to improve our credit score. On this note, I think it's also important to remind you to make sure that you keep your social insurance number safe, because anyone who actually has access to your social insurance number can actually apply for credit using your own details. So safeguard your social insurance number, and if you notice any inaccuracy, make sure that you reach out to your bank or reach out to the credit reporting agency to question what's going on. So to be able to build a good record, you need to do these things consistently over a period of time, after which you will then begin to see the effect on your credit score. If you apply for credit and you do not have a good credit rating, two things might happen. You might not qualify for a very high amount, of credit, and then the interest rates would also be very high. Those are the two scenarios that might play out if you do not have a co-signer with a good rating and your credit score isn't so good, or you've not been in Canada for a very long time to be able to have a good credit score. So for instance, you're trying to get a mortgage, or you're trying to get a car loan, and you've not stayed in Canada long enough to build a good credit, or you've stayed in Canada but you've not been doing very well with your credit, you can actually get someone who has done a pretty good job with your credit to co-sign with you, when you're applying for the credit, because the person's record might be sufficient enough to cover up for your own lapses. Yeah, so that pretty much brings me to the end of today's video. So if you enjoyed the video, do not forget to thumbs up, like the video, do not forget to share, and do not forget to subscribe if you haven't subscribed, so that you don't miss out on content like this again in the future. Before you leave, please check out my other videos on my experiences as a newcomer in Canada, because you might also find them helpful. So in my next video, take care of yourself, stay safe, and always remember to be kind. Goodbye.